across. We have Pramit Chaudhary, Head South Asia Practice at Eurasia Group, joining us. Pramit, talk to us about how big this is from an India standpoint. And now that we have at least a pulse of what the possible trade outcome could well be, what are the key nuances, at least in terms of positives? Let's start with that from an India standpoint, in your opinion.
So the core of this is what is happening at the macro level is that the WTO system is falling apart. Its tribunal system is paralyzed. MFN, most favored nation status principle, is now effectively voluntary for nations. So you can see not just the United States, but other countries now imposing tariffs basically on a unilateral basis. Indians barely know that we trade with Mexico about $5 or $6 billion a year of exports. Mexico imposed a 50% tariff on us just overnight. These type of things are now happening on a regular basis. So what is your plan B is what every government should be asking itself on the trading and imports and exports. The answer is you have to develop a network of FTAs that cover your primary trading and investment sources. So we've done that with the United Arab Emirates. We're now doing that with the Gulf Cooperation Council, which mainly means Saudi Arabia. We did that with the UK. We've done that with the European Union. We are going to revise the ones we have with Japan and Korea. We have one with Australia. And now we have one with the biggest market of all for us is the United States. So in many ways, we are securing ourselves in terms of imports, which not just trade. Remember, investment goes along with trade. So it also improves our investment flows as the international system basically crumbles.
Pramit, if you look at the entire details of which has been released by both the countries, do you think that it's a pretty even exchange with respect to the kind of concessions that we have given and the concession that US is giving, or is it tilted in favor of the US?
So this is a description I find very hard to understand. The United States is by far our biggest economic partner. It is our biggest source of FDI, FII. It matches China in terms of trade. It is our biggest source of remittances. We, on the other hand, are almost insignificant for the larger United States economy. And the primary impact we have, which is service exports by us to the United States, is something makes us dependent on the American market. So it will never be a fully balanced agreement. What you want to do is try to make sure that the areas that you see growth potential are secure, which we have done in electronics, in pharmaceuticals. We also want to make sure that certain areas which we see as very sensitive, and in our case, it's primarily in the agricultural sector, are preserved. Two advantages we have built into this, however, and you'll see this is something we have done already with the European Union and the UK FTAs, is we have always struggled to compete against the Bangladeshis, Vietnams, and Chinas of the world in textiles, apparel, and footwear. Why does that matter? Because those are very labor intensive, especially footwear. A lot of other products that we sell don't have too much employment prospects. This is where we struggle. What we have done in these FTAs is we now have tariffs that are competitive, if not lower, than what these countries have in those areas. This gives us an enormous opportunity to create jobs in a sector that we have desperately fallen behind on. So that's one area I think that's important for us. The other part we'll have to see is that America is not a major industrial producer. It's very important to realize that they don't actually export many industrial products. Airplanes, for example, is our primary industrial import from the United States. What we now need to be doing is looking at inviting or getting other companies in other industrial sectors, for example, even American companies, or companies that make machine tools and engineering products that export to the United States from Europe, from Southeast Asia, or even from the United States itself, coming to India and using us as an export hub to the United States. Then we, in fact, basically are able to say, we can give you really low tariff access to America. if you use us as an export hub. That's something we have to work on over a period of time, and that will be an enormous boost. I mean, what Apple did can be replicated at the medium-sized level, would be the big gain for us.
Right. Pramit, also, hi morning, wanted to get your views on two sectors. One, agri, where we understand that the Indian farmers are not very happy with the kind of trade deal that we've inked with the US when it comes to agri, because it opens up a lot of US exports in the agri space in India. And the second one is digital trade. US is clearly trying to gauge an agreement or get to an agreement with us like it has with Malaysia. Does it impact India's standing at the WTO in any manner? So your views on agri as well as digital trade.
So from what we can see on the agricultural side, we have made concessions, we lowered tariffs, primarily on soybean oil, some varieties of livestock feed, almonds and apples, and a few other areas. Keep in mind, all of these were areas we already imported. We already imported. I mean, we are the third. We were, even before the BTA, the third largest importer of American apples in the world. We were the first or second largest soybean oil importer in the world, on most years. Livestock feed is something, actually protein-enhanced livestock feed, we're actually desperately short of, which is one of the reasons why our dairy productivity and our poultry industry remain very low in terms of their productivity. So we need to import livestock feed anyway. The game for us, what I suspect is going to happen now is, where were we importing our soybean oil before? And we were getting it from Argentina, sometimes from Brazil. What we will actually see more than increased imports is that we switch the source of the import source from Latin America to the United States. We may pay a little bit extra for that, I'm not certain, but it depends on, as India has said, on our market conditions. But ultimately, it's really more about us importing from another part of the world, switching from another part of the world to the United States. If you turn on your Q-commerce app, you will see apples from New Zealand, Italy, America, as well as Himachal and Kashmir on your app, all relatively priced about the same. So at least the imported ones. Now we will see America come in with an advantage. And finally, alcohol, as everybody's mentioned, but that, again, we did that initially with the Australians. We cut our tariffs by 50%. We brought on the UK with the same, and it's also part of the EU. So that's actually not a major concession. We're just extending what we already have conceded to other countries, to the United States. So overall, I'm not concerned too much about the agricultural side. The real story there is about having India become more productive and competitive in agriculture ourselves. We should be exporting much more than we are. And unfortunately, our bans on certain technologies like genetic modification have made us extraordinarily uncompetitive. We have the lowest productivity levels of soya production in the world because we use a 1970s germplasm, ironically imported from the United States. The rest of the world has moved on ahead, and we simply have not.
Pramit, on the policy front, it seems that India and US are aligning with respect to economic security when it comes to supply chains and innovation. Do you think this could be an issue going forward, in this alignment? Because we have always maintained that we will have our own sovereignty in terms of how we align with various countries.
So your terms of hardware or in terms of
Economic,
standards?
in terms of supply chains and innovation?
So we want supply chains to move to our country. I mean, trade policy today, as a senior government official told me, is now basically supply chain policy. As supply chains are moving from China, or at least trying to find an alternative to China, and electronics has been the most impressive gain for us. We need to bring more. We need to bring more of those supply chains, and this means we have to generate bits and pieces of that supply chain in India. We'd like to produce as much as possible, but frankly, it's impossible for us to do all of it. Nobody does 100% of any major sophisticated supply chain in the world. And in some places like EVs and batteries, we are woefully behind China. We are even, in fact, woefully behind even parts of Southeast Asia in these areas, and we need to catch up. So before we get to the complete ability to say we are economically sovereign in these areas, we first have to master those supply chains, or at least get a large portion of it. The game is no longer globally about being able to produce everything. Autarky is not the policy. It's to be able to make yourself indispensable to global supply chains, at least a portion of it. Nobody can mess with Taiwan because Taiwan dominates high-end semiconductor fabrication.
Right.
The problem with India is we are not indispensable to the rest of the world in any supply chain. And that has been one of our big geopolitical weaknesses in an international system that's falling apart.
Okay.
But that Taiwan, a country of 20 million people, is more indispensable to the global economy than we are is a major weakness that we have to reverse.
Okay, fair point made there, Pramit. But on that note, we'll have to let you go. Thank you so much for taking the time out and decoding this entire policy or whatever updates that we've received on this trade deal over the weekend. Thanks so much for that. Viewers, after this very short break, we'll be shifting focus, talking about earnings back home, decoding what the market outlook is. We've also got Kunal in the studios, so a technical check is also long overdue. On that note, time for a very short break. Stay tuned. We'll be right back.